The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 15th. Is it the 15th? Yeah, it's the 15th. It is the magical Monday edition or magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hope you had a great weekend. Great to be with you. You know, if you didn't, let me tell you the easiest way to do it. It's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. That's right, you can do it right now. Dial on in, 877-927-6648. If you can't dial in, let those fingers do the walking. You can always send me an email, steve@tfnn.com, and inside the subject heading, if you'd put radio show question, that would be great. Of course, if you're in the Tiger's Den, well, any ping will do. Just as Ruby, I believe, wrote a ping earlier, and we're going to get to that. So welcome to the show. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Right now, we got the Dow trading up 62 points. The print is 25,402. S&P's up 3, 2769. Russell's up 10 points, leading the charge here. Well, the trannies are leading the charge percentage-wise, both up about 0.7%. An NDX 100 is off 29 points or 0.4% to the downside. Gold is up $8, straight out of 12.30. So far, rejecting resistance of its weekly TAS market profile. Silver's up 8 pennies. Leading the charge to the upside, it is Triple L. That's L3 Technologies, $22 or 11%. Harris Corp is up 15. That's 10%. Booking Holdings up 14. Tilray's up 14. AutoZone is in the green zone. That's up about $10, a little over 1%. To the downside, Amazon off $16. ABIO Med off 13, Intuitive Surgical down 7, Adobe off $8, and Google down 8. So let's go to Ruby's question out here. And Ruby's question specifically said, Steve, if the Russell 2000 rebounds, in this case here, she was looking at the equity futures contract, what levels can we see, please? So let's go take a look at that for Ruby. So first, the question is, did the Russell 2000 form a bottom? Or what was Russell 2000 doing? So let's kind of take this maybe step by step out here. If I take a look at that's the daily, I do want to do that step first. I want to do the weekly time frame out here. Because the weekly, we ended the week, and, why did price stop where about it did? Is there anything that would be a suggestion to us that maybe Ruby's conclusion here that, hey, if the Russell 2000 rebounds, or in essence is bottomed, where could it head to? So if we take a look at the weekly time frame chart, most certainly a wide-ranging bar as price moved down towards, didn't hit it exactly, doesn't have to hit it exactly, and you're looking at a red dash line out there. That red dash line, Ruby, that's your Tom DeMark setup trend line. That occurs when you see 9 consecutive bars, in this case here weekly bars, where the close of that bar is above the bar 4 bars earlier. It's a mouthful, but it is a terrific tool out there. Once you get that established, then that can set up either support or resistance. In this case here, price was moving higher, therefore it was a support line. That is where price got down to last week. So it's pulled back to a level of support. On a weekly time frame, what you're looking at Bigger picture is 1662 to 1682. I'm not saying that's where it's going, but we are taking a look at the bigger picture out here, or a picture where you and I can identify levels of support. So that's going to be two areas that you can write down on a pad of paper. Now, if we go take a look at the daily time frame chart out here, that's what I had punched up on the screen earlier. Again, we're looking at the equity futures contract. The level that you would be looking at most likely would be Stevie's red line. Currently, it's priced at 1608. As price moves higher, the line can continue moving lower. The two twains shall meet out there, and that would really be your first indication as to whether or not it's more than a counter trend rally. Probably the Russell 2000, Ruby, and everybody else out there. Probably the first, if this is some type of bottom, probably the first instrument to be focusing on, because it was so weak. What happens as price tackles that red line number? That's the oscillator and change line. Currently, again, 1608.10. So those would be the levels that I would be watching if I were you. Let's take a look at Stevie's synthetic contract with regard to the daily equity futures contracts. And what we can see out here is, and I won't see this on the current contract. So the synthetic contract has more data, the way that it itches and stitches the contracts together. It will also show me earlier signals, possible signals. These can vanish in the, I'd say in a heartbeat, but that was the snap, crackle, and pop of my fingers out there. And so here the level to be looking for will be 1603. That's the bottom of the profile. Price can get inside that, close above 1603. You're looking at 1617 and 1646. So I hope that answers your question. But here in summary is what we know about the Russell 2000. On a weekly basis, we know price came down to a level of support and held. And so therefore, if price is going to move higher, we're looking at the Russell 2000, very right-hand side. We know what the weekly numbers are, but before price can get to the weekly numbers, we got to take a look at the daily. We looked at Stevie's red line. We know what that is. And now we know that there are potentially some new TAS market profiles that are forming on the daily time frame chart. So I hope that helps you out. We've got another question that came in. Somebody let their fingers do the walking, and it looks like that was Jeff E. Jeff writes in, can you please look at Great Panther? Jeff, we most certainly can. Ticker symbol there is GPL, so we'll get that typed in. I'll go over to my other system out here. I'll type it in as well. Then I'll read the rest of your question. Of course, I typed in GPX. Don't know that actually is an equity. Looks like it formed a bottom, or is forming a bottom, or is trying to. Whatever. I did it again. How could I do that? I know, because I went to the Rocco School of Typing here at TFNN. So Jeff writes in and says, hey, has the cat declawed? Has the cat declawed? Or do you see a chance that it still has one more of its 9 lives left? And he, of course, is referring to Great Panther Silver out here. And Great Panther Silver doesn't look really that great. Jeff, are you in this? Is that the deal? And it just doesn't look great, not compared to what we've seen with regard to other mining equities out here. But don't fret too much out here. What it looks like Great Panther is really doing is trading between about 82 and 97 cents out here. That becomes your range. Of course, right now it's trading at 84 cents, where other mining stocks are moving higher. Maybe not all of them. Great Panther isn't. So if this is a new position, Jeff, that you're thinking of moving into, I just have one word to say. This is coming from Rodney Dangerfield, from that great movie where he did the Triple Lindy. It is don't. I think that's what he said with regard to moving out of the house once you graduated college. I think he said don't. I say do. Steve Rhodes with TFNN. Right. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6 and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. And not to leave Jeffy, was kind enough to write in a question, was asking about, Great Panther out there. But look, if we take a look at Pan American Silver, PAAS, and we take a look at how it's trading versus Great Panther, and you're looking at silver stocks, you can see how this is moving higher, trading above its daily market profile, whereas Great Panther is headed towards the bottom of its market profile out there. In the case of Pan American Silver, this thing should be trying to head up towards the 1653. But what it needs to do first is get above its resistance point. The resistance point was established by this little gap to the downside on the trading session of September 4th. So it's really the August 31st candle low at 1559. So far we can see on a daily chart how that resistance area is held, but closing above 1559, then that's going to open up the doors for 1653, which is the top of that weekly profile out there. And then since gold is trading higher, now seems like as good a time as any to go take a look at it. And then for me to take Jeff's question, or me to say, hey, what are the mining equities doing overall? This way, this will assure you that you won't be focusing your time on Great Panther. It just doesn't make a lot of sense out there. So if we take a look at it, so what do I mean? Well, first let's take a look at gold, see what gold is doing. We just took a look at Pan American Silver, so how it was running into a resistance area. If you take a look at the daily time frame chart here for the gold contract, you can see that it is doing the same thing. Now, it's not at a gap to the downside. Instead, where it's at is its weekly profile. Now, it's weekly, so it doesn't really mean anything until Friday, although on a Monday it would be nice if price could close above 1233.80, because then the level of resistance will have failed. Now, this chart here, we're taking a look at what traders who trade gold in euros, yen, and pounds are looking at, and what you want to see for anything that you're long, in this case here would be the mining equities, kind of another reason why Great Panther, there's something wrong, is because it's not moving higher. We'll go make that correlation stick here in a moment. But with gold moving higher in all of the currencies, we can say that these traders around the globe right now are buyers, not sellers, as of 1:20 in the afternoon. And that is what gold needs, and that is what the equities need in the mining sector. How do we know that? We just know because of that correlation. I don't have the correlation tool up here, but what I do have, and in order to check in on the health of, hey, could this move be real? What we do is we go take a look at the top panel of this chart here. It happens to be the gold futures continuous contract. This way I can pack in a lot of data, and you'll see like some green arrows on the going from lows to highs out here. And what I have done on this chart is I've gone back to take a look at the runs from low to high, and compared those runs percentage-wise, rate of change-wise is what I should say, to what occurred inside of the HUI and the XAU. So we kind of took a look at index to futures contract out here. And when there's real movement, when there's real meaning, a meaningful low inside of the mining equities, what you will see is they will outperform the metal. So what do? Do you buy GLD or do you buy GDX? Exactly. You buy GDX if the move is real out there. If you take a look at the run, for example, you can go back and do this yourself, between the December lows in 2015 and the highs in July of 2015. So you had a nice, 7-month run to the upside. During that period of time, gold had a rate of change of 28%. However, the HUI 145%, the XAU 131%. Right? This is the reason why you would be looking for bottoms in the metal, but to give you the signal to go ahead and go along the mining equity. If we take a look at another time period here, and this takes us back into July of 2017, the run was much shorter. It was a 2-month run into September of 2017. During that run, gold had a rate of change of 11%, but the HUI 22% and the XAU 20%. So you can kind of see here's a 2-to-1 outperformance. The prior run in 2015, it was like a 5-to-1 outperformance. If we take a look at the last time that gold ran to the upside, takes us back into December 2017 into January 2018. Again, a short period of time, but gold's rate of change was 8%, the XAU 13%, the HUI 11%. Not a 2-to-1, not a twofer. So where are we now? That's where we can go take a look at Stevie's panel on the right side here. If we take a look at the days bars earlier, and I'm not talking about give me a shot at tequila. I'm talking about actual bars and pricing. The low in gold was made 41 bars ago. So I just set my rate of change to 41. And what that tells me is that the rate of change in gold is about 3.78%. We'll call it 4%. But the rate of change in the HUI is 9%. Sounds like more than a 2-to-1 ratio to me. And if we take a look at the XAU, it's 7. So you've got about 3.8 to 7, so just under 2-to-1. The HUI is over 2-to-1. There could be something here. So, Jeff, you're on the right track. But Great Panther is not the one. If you're in it and you've got a loss, maybe rotate out to something else, because you've already got that money committed to that sector out there. Caveat, gold contract hasn't been able to break above resistance. So maybe wait for a pullback as well. So I hope that helps you out. Hope that helps everybody out there with regard to taking a look at gold and silver and then the mining equities and maybe what you ought to do. Let's go check in. I don't see any requests inside the Tiger's Den for any thing to go look at. That never helps Stevie because I'm always like, oh, what do I do next? And so we're looking to, whoa, there we go. Greg, Susanna, I like it. We've got a couple of questions out here. So SJ writes in, hi, Steve, would you please run your, Susanna, how'd we work that out? She says, hi, Steve, would you please run your analysis on GDX and a possible entry for going long? Okay, all right, Susanna from Canada. So we did everything except try to figure out, hey, where do you go long inside of the GDX out here? So let's put GDX up on one of my other screens. Let's put it over here for our 3 time frames out here. And if you're looking to go along the GDX, the ideal level, well, I'd have to say at this stage here, Susanna, I can give you maybe a couple of different levels. One level would be, see, in the case of the GDX, it broke through its downdraft, which took place on August 15th. In 1974 was the number. Now, price was able to close above that with 134 million shares versus a downdraft of 127. So a pullback to 1974, old resistance that now may become new support, would be level number 1 to fire away at. Level 2 on here would have to be 1912. That's the top of its daily profile. 1979, the top of its weekly profile out there. So those would be the best levels that I could provide you with right now, 1:26 in the afternoon, and that's for Susanna in Canada. And that rounds out this segment on, hey, Steve-O, what's going on with the GDX? We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 15, S&P is off 3, NASDAQ down 55. We've got a question here written in from Greg M. So let's go to Greg's question. Now, would you look at AEM, that's Agnico Eagle, would you consider in an A to B equals CD up with 39.86 being the 1.618 expansion? What do you think? So let's go take a look at Agnico Eagle, and let's take a look at the daily time frame chart out here. And the A to B equals CD pattern, folks, that is a tool that you can use to project where price is headed to. And Greg's A to B equals CD, slightly different than mine. Let me give Greg what I'm using. Let me give you at home what I'm using, the reasons why for my A point, the B point, the C point. That's where the market does 75% of the work for us. I did a workshop on this, by the way, if you'd like to learn this pattern so that you can apply to your positions, your equities, works on all time frames, and it helps you to understand when the run is over, when to buy or sell the D point. So, Greg, I imagine that we're started with the same A point out here, which was the low from September 7th. That low was $32.18. Now, what I use for my B point out here is the trading session of October 3rd. I don't know if you use that or you use the session from September 19th. And then you used as a C point September 27th. Now, September 27th's low was 33.10. I'm sorry, 33.20. Let me get that correct. I was looking at one thing, saying something else. The low on September 27th, if that was your C point, was 33.20. But what happened was the market went on and made a lower low back here on September the 10th. That was 33.10. So I know exactly where my C point is. Now all I have to do is go further left to figure out where the highest high was. And that came in on the trading session of October 3rd. So I don't know if that is what is the difference between your A to B equals CD or mine. We're not going to try to figure that out here, but let me give you the A to B equals CD that I'm using. With regard to what price has done thus far, the B point, which is October the 3rd, had volume of 1.4 million shares. When price took it out, and it took it out just 2 days ago, October the 11th, they did it with a wide-ranging bar, meaning it gapped up, close towards the end of the high of that session, and it did it with volume. It did it with volume of 3.4 million shares. So 3.4 million shares, so there were more buyers, 3.4 million of them versus 1.4 million the time that it made that high. So it's confirmed A to B equals CD to the upside. But the one-to-one level was hit on that session. Look at how price, like a trampoline, just simply came off of that C point, came off of it truly with conviction out here. And what we can see is prices continue to move higher, not with volume, doesn't need to. It already did the volume schmolium thing out here. But Agnico Eagle, it has an A to B equals CD. By the way, the 1.618 level is 39.52. Not a huge difference between yours at 39.86, mine at 39.52. The 2.0 level is 41.03. Now, we can come over on the left-hand side of the Agnico Eagle chart, and what we can do out here is we can take a look at possible resistance lines. Let's go ahead and make those red. Let's make them red, and let's have them say resistance. Why not? And so we can see, well, hey, how about that? One of those resistance lines is at 37.93, and price is taking that on. In fact, it's trading above it right now. That, by the way, Greg, is the low from the trading session of August 14th, 37.93. If you close above that, that's a positive and says, okay, it would be like the Eagles. I'm going to take it to the next level. I think that's who said it. I think that's the song. And that says that 39.52, you're looking at 39.86 is totally in play. So, yes, you've got the A to B equals CD. I'm not saying that's where price is going to stop. I'm not suggesting that you exit your trade if you're in it. But maybe it's just a trade, not an investment. And if that's the case, then, hey, take that money and run. But this looks like it has much, much further to go to the upside. And if you and Steve-O were to sit back and just take a look at this and say, well, where is that upside potential? Eventually, we'd be looking for it to make its move up to that pole vaulting area, that high from back in July of 2018 in the $47 level. Now, we've just been focused on the daily time frame chart. The weekly says, well, that's a possibility. It's in the V for victory formation as we speak right now. Sort of V for victory. But look, it's up above resistance, meaning it's TAS market profiles. You would set your sights on the swing point, and that's from July 2018. That's the $47 area. How are we going to know if it's going to really get up there? Well, really, the next resistance level looks to be the top of its monthly TAS profile, 39.70. So that becomes your number. You're at 39.86 for an A to B equals CD. 39.70. You clear that. You close above that 15 days from now, right? The end of the month, and then you probably are on to something. So, Greg, I hope that helps you out, and thanks so much for writing in. We've got another question. No, we don't have another question. So that means now Stevie's got to wander on his own by taking a look at these charts and try to figure out what is it that you might want to take a look at. What should we be taking a look at? Hey, how about that spot volatility index? That seems like something to look at. Why do we want to take a look at that? Well, one of the things we want to take a look at, and it's the daily time frame chart out here. In the daily time frame chart, what occurred on Friday was, if you take a look at that candle, it actually qualifies as one of those shooting stars. Now, the one thing that you and I know about a shooting star is, or at least we're going to know right now, is it either works or it doesn't work. And what does Stevie mean by that? I mean, when it forms, if it's going to work, price is going to be lower. So you're going to want to watch this at the end of the day. It doesn't mean a thing because it doesn't have that swing at 1:36 in the afternoon. But if at 4 o'clock you see the spot volatility index has closed below the low of Friday, by the way, that closing price was 21.31. You're at 20.51 as we speak right now. That says to you that, okay, this thing is ready to move lower. Now, if this moves lower, what does that say? That says, well, the S&P 500 ought to trade higher. So now we go to Stevie's VIX page out here. And where would price likely be headed to? Well, if we get the move lower in the spot volatility index, we'd be looking for its target, not to be an A to B equals CD. We'd be looking at that 50-day exponential moving average. Now, of course, this price level is going to change by pennies or so over the coming days. But if we do get that move lower in the spot volatility index, then what we're looking at is about 1452. That's the 50-day exponential moving average. That becomes the target out there. And it's going to be at that level where it releases a whole lot of information. Ruby, by the way, was taking a look at maybe the Russell 2000 has formed a bottom, and how are we going to know if it does? And we took a look at Stevie's red line. Our version of the red line, so to speak, is 50-day exponential moving average on the spot volatility index. Why? Great question. Glad I asked it of myself. And the reason is because when price closes below the 50-day exponential moving average, the only meaning that you need to give it is it's called lots of liquidity. It is a liquidity gauge at that stage. Likewise, when price is above it, not referring to above it and then moving lower, but when price closes above it and it's moving higher, tells you that there is a lot of volatility, a lot of price erosion. People get all caught up in the number. It's 12 or it's 11. And they forget to do one thing. It's kind of like understand there's a right of way and who's got the right of way. Well, inside the spot volatility index, the right of way is the 50-day exponential moving average. Just pay attention to that in price. You'll be in really good shape. I'm not talking marathon shape, financial shape. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Path's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. I almost overlooked one of the requests from one of our denners. That was Coda in the Tiger's Den. He wants to go take a look at I think if the name is, if I pronounce it properly, it might be Aphiria. Yeah, that's what I'm going to have to go with. APHQF is a ticker symbol. Of course, this is a Sensimedia stock out here. It's a pot stock in Canada. And if we take a look at it, close enough. Okay, good. No cigar, or I should say no big doobie. But if we take a look at where this is headed to, it looks like back to its recent highs. If we look at the daily, the monthly out here, what we can see is there's a potential resistance at the top of its market profiles, and that's between 1669 and 1686. So if we look at that, looks to me like that's where price is headed to. I don't see anything bearish as I take a look at it. Obviously not a lot of data really to use out here. If it can clear that level, it gets back to the all-time high, which is in the 20 zone out here. If I look at the daily time frame chart, it's been holding Stevie's green line. You're going to be in what looks like in day number 6 perhaps of the Tom DeMark setup 9 count. Last time it had a 9 count up at the high. That in essence set the high, and so, but it looks pretty good as we speak right now. You can see the bearish signals out here. You've got the bearish engulfing candle from September 20th. You got that 3-candle evening star out here from September 13th. So the sellers are lurking out there, Coda, just so you know. I mean, they can't hide. They have to show us where they are at. That's what gives us a little competitive edge. And so you'd have to really watch volume, right? as prices getting out there? Are the buyers ready to try to run over the sellers? And so the volume metric you're looking at really is a trading day, September 12th. The volume there was 3.3 million shares. The first time up was 5 million shares. That's why price is trying to get back up there. Today, about 1.7, 1.8 million shares, and maybe 3 something out here going into 3. So it just suggests to you and I that price ought to go test those most recent highs in that 1686, 1669 level. So I hope that helps you out. Sorry that I had overlooked that the first time, but have no fear. Because we caught it in the end. All right, so no other questions that I see inside the system. Hey, by the way, when you're sending me emails, I usually get a few towards the end of the show, and which is a real bummer because I know you took the time to write, and I'd really like to be able to review your question. So, but I don't have any control over the ISPs out there when they go from your box to my box, and let alone my phone out here. So just try to send those early on. Nah, you can send them at 9 in the morning, but then that makes it hard for me. I'd rather get them during the show. I'd rather, fire away at those things like around 12:50, 12:55, or any time during the show. But late in the show just kind of makes it complicated. Actually, because I don't get them until I'm off the show, and I'm like, that's terrible. Life does happen for you. You got to live. You don't have to live by it, but I don't just give those words out there. Look, I absolutely believe. I watch people that are prisoners of their past all the time. It just makes me want to hit my wall up against the building out there. Just wants to explode because there's no reason to be a prisoner of your past out there. The past does not equal the future unless you want it to, and a lot of people want it to. They just hold on to their old story out there. I don't mean it, but it's important. But I also believe, because sometimes people might think, hey, you just say that stuff, you don't believe it. Look, I do believe that everything in life happens for us, good or bad. When it's bad, we got to spend time trying to figure out what is it that's good that comes out of it. I play golf. I started playing golf again. I kind of gave it up for about almost 10 years out there. And this summer started playing again. And I'm always taught the lesson how life happens for you. It's just simple things, but it just simply reaffirms what it is that I already know. I've been playing pretty well, hit a nice drive, hit the second shot, think it's a nice shot, and then boom, it ends up in in some deep rough somewhere, and you're like, we're playing games against each other, for a few shekels here and there. And then, of course, you go hit that next shot and you focus on it. Apparently, the universe had me in the spot where I was supposed to be, because then you go ahead and you make one of those miraculous chip-ins. That is how I know on a continuous basis that life is always happening for us, not to us out there. The moment you make that connection, your entire life can change around. But you can't be a prisoner of your past. You got to let that last shot go, so to speak. All right, enough for trying to, just kind of fill up some time out here. Where do we want to go next? Where do we want to go next? Bottom or not, right? That's really the question. We're seeing a pretty nice move in the advanced decline data as we speak right now. If we go take a look at net advancing issues, we're at about 1,013. So advancers leading decliners by slightly over 2-to-1 right now. We're really going to want to watch. If this is a bottom, what we're really going to want to do is watch this over the next 10 trading sessions, because we know we were in extremely oversold condition, and if the advanced decline data can get above 0, then Ruby, that'll be another example for you that, okay, that bottom may be pretty solid, and whether it's Russell 2000 or some other index. So we're not anywhere near 0, but as we get to that 0, that's going to be another thing that you and I are going to want to keep an eye on, as well as just how we'll look at the bullish side and the bearish side. The bearish side is you get up there and you turn back down. We've been underneath that 0 line since September the 4th out here. It just took until October the 4th, one solid month, before things just simply fell off the planet of the Earth, so to speak. But price went back to support. Now, it wasn't just, by the way, on a weekly basis in getting back that time to mark support trend line. Same thing happened here inside the weekly ES mini. We can see how price tested it, rejected it as we speak thus far. Same thing happened inside of the Dow, I believe it was. If we take a look at the Dow equity futures contract, contract, yeah. Basically right to the tick, so to speak. Of course, when I say right to the tick, I don't mean really right to the tick. I mean pretty close to right to the tick. You kind of get the gist out there. And inside the NQ on its weekly time frame, was it doing the same thing? Yeah, it was doing the same thing too out there. So what we want to watch is the bearish side. Just simply, hey, it fizzles out, and today becomes the high. That would be it. But the real thing that you'd be watching when we take a look at our charts is what's that advanced decline information as it gets up to that zero level? Can it overcome that zero level? It's not really a resistance area. Just got to kind of watch where things turn down or turn up or blow through, and just how quickly can the advanced decline data accelerate out there. And we'll come back to that. It's something I'm watching. If it accelerates real quickly, it could give us one huge bottoming signal. And I do mean huge, but we're not there yet. Just know what to watch for, and just thought we'd take a look and take a spin and take a look in on it and see how it's doing as we speak right now. So with about 10 seconds to go, Dow's up 100 points, but, you know, this is a market with lots of volatility. It could change in a heartbeat out there. And but right now the heart is beating to the upside. Spot volatility index down 5%. Hey, by the way, do you see that spot volatility index was down by over minus 10% on Friday? You know, that's an initiation move, meaning prices move higher. That's what we see right now. We'll have to see what it means at the end of the day. Steve Rhodes with TFNN. We'll be back for our 2-minute wrap right after this commercial message.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Looks like our final question coming in from Tim M. And Tim writes in, says, Steve, you may have already covered this, but has the S&P bottom, as you had described on Friday, have the best of days? So, Tim, specifically with regard to the S&P, and I don't really recall Friday's show necessarily, but I'm sure that one of the things that I would have been looking at would have been the 5-hour time frame chart for the ES Mini, and because the evening before at 5 p.m. it had generated one of those Rhodes momentum indicator signals, and then at 11 o'clock in the evening it gave us that that nice little cavalry, the bulls have arrived signal to suggest that counter trend rally or bottom was the message. We saw price just kind of struggle with Stevie's red line going into the close on Friday. We saw price close just slightly above it. What we saw take place in the overnight action, this is a 5-hour time frame, was just testing Stevie's red line. As the market opened at 9 o'clock, what we saw was we had a confirmation again with price trading over that level. That's important. And then in the 9 to 2 o'clock time frame, we saw price testing that low of 27.53. So we know, Tim, that the market is trying to form a bottom out here with regard to the S&P. What's going to really then be the next confirmation of that, so I'll give this figure to you. You can watch for it in the overnight action, would be I'm looking at its 2-hour time frame chart. In this case, I'm looking at the 2-hour set of TAS market profiles. And 27.90.10, now this set of profiles could change, but right now let's go with what we've got. In 27.90.10, won't be 10, so 27.90 or 27.90.25 would be the level you would need to see price close above to give you that confirmation. Why? We haven't seen a close above a 2-hour TAS market profile in quite some time, and that would be an indication to us is that a old resistance has now failed and price is ready to do more counter trend rally and or a bottom. So Tim, thanks for writing in. Hope that helps you out. Folks, stay tuned. Your favorite polar bear, my favorite polar bear, hey, everybody's favorite polar bear, David White. He's up next. I'll be back with you on Terrific Tuesday. Thanks for being here, and we'll see you soon.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletter.